Now you're gonna pay the price. 5 of my stocks reported earnings after the bell. Not 1, not 2, not 3, not 4. All 5 flippin' flapjacking stocks are down after hours. You gotta be kidding me, okay? We gotta go through the numbers. I gotta tell you what I'm planning on doing with these stocks. Am I gonna sell them? Am I gonna buy more? Am I gonna just hold, okay?
Block stock is still undervalued, while Wall Street is giving us a gift for Square stock and PayPal stock right now.
So PayPal is a position I've been building very, very heavily. I've been buying shares as pretty much as fast as I possibly can. These are the shares I have in the public account, a little over 6 figures worth in the public account. I also have shares in other accounts. I've just been buying the stock very aggressively, specifically like the last 3 months.
Cash App, that's from the company formerly known as Square. Block at this point, the company letting people invest their paychecks directly into Bitcoin, as well as adding something called the Lightning Network that allows instant payments. That is ARK's 6th largest holding. ARK notably sold, though, all of its holdings, completely got out of PayPal, which, of course, its Venmo is a big competitor to Cash App. Kathy Wood says PayPal might still be a winner in fintech at some point, but the ARK analyst had higher conviction on Block, in part because of Bitcoin.
I think the way Cash App is growing organically, as opposed to more of a top-down, let's get this thing moving, stretch, stretch, stretch. I think there's an organic movement. I think it's going to be is going to be fired up now by Bitcoin.
Hit me on my Cash App, check it in the morning. Cash ass, cash ass.
Jack Dorsey's Block, the parent company of Square, Cash App, and Afterpay, reported a 25% year-over-year growth in its second quarter revenue to $5.53 billion. Very impressive in this market. The company saw a 27% year-over-year gross profit to $1.87 billion. Driven by a 37% year-over-year and an 18% year-over-year gross profit growth in its Cash App and Square businesses, respectively. Block is beating estimates on the top and bottom line. It raised its profit forecast for the year, but the stock is taking a hit. It's down about 13%. Compared to PayPal, although they also reported double beats. Revenue growth is only 7%. They also got smoked on the stock price, down 12% after earnings report. In terms of Block stock reaction, it seems way overdone to me. Why Wall Street is giving us a gift of Square stock and PayPal stock right now. Am I buying more or holding at this point? I will explain it all right after this.
How you like that? How you like that? Nah. Look at you, now look at me. Look at you.
Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here, and you know what to do, and push my button if you like what you see in today's video, because you're already a success. It is done when you join the Audacious Money Witch Club. This video is brought to you by my website. If you're a good boy, go to audaciousmoneywitch.square.site to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore. You want it to be real. You want it to be true. You want to join the Audacious Money Witch Club, don't you? In Square ecosystem, they're focused on enabling omni-channel, growing upmarket, expanding globally, and integrating generative AI. Because Square believes AI can create new features and efficiencies for the customers. In July, Square launched the Square Team Communication and Announcements AI. It looks like there's some disappointment around the July gross profit growth forecast. This is why you don't want to trade earnings. It's sort of a gambling behavior. That's why if you are a swing trader and you want to protect your gains, you want to exit before earnings. There are good things happening in the business, and there are some negative sides as well. One being the July numbers. They gave a pretty explicit outlook for the second half of the year, basically saying that their top line gross profit is decelerated from 27% in the second quarter to 21% in July. And they indicated we should be expecting it will remain closer to that level, like low 20s, for the rest of the year. The reason is mainly simple, because they are lapping from some unusual dynamics from last year. They had some pricing changes, for example, that gave them some benefits last year. There are more broadly changes in the industry. The other thing is that underneath the covers of their second quarter results, their Square business, the little white Square point of sale systems in the US, the growth rate there was a little bit slower than people were hoping for. Volumes were only 12%, gross profits were up about 15%. The Bitcoin revenue was up about 34% year over year. Quite impressive in a depressed crypto market. For Block, the way a Bitcoin flows to their system, they actually have to record it as gross revenue on the income statement. So it's optically always looks like they have so much revenue through Bitcoin, but it's only a net basis of a couple percent. It is continues to grow though. That is a reflection of Cash App. Block's digital bank, which is the competitor to PayPal's Venmo, Cash App has just been an unbelievable success for Block. 54 million monthly active users here in the US. 2/3 of them use the app weekly. It's become the 20 million users they are using it truly as a digital bank, meaning they have got a debit card and they are going direct deposit with their paycheck. It sort of quietly emerged post 2020 as by far the leading digital bank in the US. And it's those users that are the ones that buy and sell Bitcoin and stocks. So that Bitcoin revenue growth is highlighted and reflected the extraordinary growth of Cash App has had over these last couple of years. For the macroeconomic side, from Visa, American Express, PayPal, and Square's earnings call, it seems to reported weakness in the micro market, meaning the small business is not doing well. Maybe the soft landing story that the big tech is presenting is coming to an end. Deterioration in the spending-based economy that payments is tied to, we have started to see a little pocket of weakness down at the low end of the small business world. The company's CEO, Jack Dorsey, reiterated the management's focus on profitable growth, highlighting a pullback on hiring and marketing spending, as well as strong performance management.
Call what we've built for sellers an ecosystem. That is a set of hardware and software tools and services that work together, often positively reinforcing one another, creating a resilient customer relationship. In the past, sellers would have to hook up all these tools themselves to run their businesses. We decided to take all that complexity away, handle it ourselves, and give sellers time back to focus on what matters, their customers, and growing their business. If they grow their business, we grow our business. It's a perfect virtuous cycle with very little tax on our customers. And it managed to expand our value beyond payments and towards software services. It also gave us resiliency. Sellers may hire us to do 3 or 4 jobs for them. If they aren't satisfied with one, they can fire us for that one, but they aren't firing our entire company. They may not use us for a loan, but will continue to use us for software, payments, register, and CRM. It gives us time to address the issues for the service they fired, and perhaps in the future, they will rehire us for that one too.
The company also decided to wind down operations in specific markets, including Cash App's Verse brand in the EU and its buy now, pay later platform ClearPay in Spain, France, and Italy. These markets required substantial investments but did not achieve the anticipated growth and profitability targets.
So in 2019, we found ourselves with two massively scaled ecosystems, one for sellers and one for consumers. And we asked two further questions. Do these ecosystems connect? And should we create ecosystems for new audiences? These two questions get at the heart of how unique we are and how massive our potential value can grow over time.
As a result of financial discipline, Block raised its 2023 adjusted EBITDA guidance to $1.5 billion, up from the previous forecast of $1.3 billion, and raised its outlook for operating income for the full year. The quarterly results were strong, but Block's expectations for full-year negative net income is likely the key hang-up for investors. One thing I like about PayPal stock is that they have a positive net income and they are buying shares back. Margins were a big concern when it comes to PayPal, which saw shares sink on Thursday. PayPal stock was down another 1.1% on Friday. It didn't go as Jeremy predicted.
When it comes to PayPal, the great news is the stock trades dirt cheap.
We like to compare PayPal, unfortunately, to an IBM of the world. We wonder, is this the new big blue? Thinking about a company that was at the top of its industry that ultimately saw its organic growth prospects start to decline.
If the stock's down 6-7% tomorrow, which I don't know, I think there's a decent probability PayPal is actually going to come back during the trading day tomorrow. I don't know if it's going to finish green, but I wouldn't be surprised if this baby comes back because I think there's a lot of people salivating over this one, including this guy right here.
Limited upside to Cash App, tepid seller gross payments volume, and a second half outlook below investor expectations likely won't stoke incremental enthusiasm near term. I was encouraged about the company's expectations for re-accelerating growth in the fourth quarter. As for Block stock, it's good to see cash and cash equivalent is growing and total debt is shrinking slowly. However, one thing I don't like is Square share outstanding is growing as well. I guess that's how they keep the cash balance growing, printing their own cash as the stock-based compensations expense to increase quarter over quarter to third quarter of 2023. Even after they print their cash from selling shares, from their 10Q, we can see that they have unrealized losses in both short-term debt, securities, about $19 million, and long-term U.S. government bonds, and corporate bonds, about $26 million. I guess even AI couldn't predict interest rates. Go back to see my TLT videos if you are interested in macroeconomy and U.S. Treasury bonds. I think the higher adjusted EBITDA forecast represents a slower pace of hiring than I expected and more efficient marketing. I think the cost to acquire a customer declined during the second quarter, even though Cash App grew monthly active users 15% year over year. I think Wall Street was being too negative, especially after Block stock fell in the days leading up to the earnings report. I think the street is excessively focused on Square gross payment volume, GPV, growth. This metric is important. It's slightly missed. I still believe Square is undervalued. Business model quality is high and sentiment is too negative. I think in the long run, after we're going back to a more normal market, meaning no recession nor inflation, stocks like Block and PayPal will do pretty good over time. I do think this 12 and 13% drop is a great buying opportunity because Fed liquidity is making a higher low every week. This market could keep going higher, so I am confident in adding my Block shares here. If you want to see my portfolio, become my good boy on my website. Link is going to be in the description below. You are such a good boy for watching my video right till the end. Bye.